Hello and welcome to the Santu Pirls market commentary for the market week ending January 4th, 2013. Hope you're having a great weekend. We'll begin with market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.34 to 1.99, moving into strongly bullish territory. The total count of securities in bullish or bearish patterns rose 9% to 2,241. The count of bearish stocks decreased 15%, while the count of stocks in bullish patterns increased 27%. The Santu Pirls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com and clicking on the membership tab, and there is a free 2-week trial if you are so inclined. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 119 points for the 6th rise in 15 weeks. At a positive 153.32 points, it has just risen back above the July 2012 top and remains above the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but below the November 2010 top, the January 2011 top, the November 2011 top, the February 2012 top, and the September 2012 top. Volume analysis. This week's volume analysis shows the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 4 accumulation days and 1 distribution day. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CCI 20 daily began a Woody's uptrend 5 weeks ago. It recently dropped below zero for 4 days, but is now well above plus 100 without presenting a valid zero-line reject signal within the plus or minus 50 range. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. Go figure. The CCI 20 began a Woody's downtrend 5 weeks ago. At Friday 12/28 close, we received a zero-line reject short entry signal. Monday 12/31 open. At Friday 1/4 close, the CCI 20 weekly moved sharply upwards past the zero-line reject point, giving us an exit signal. We will report the results of this trade simulation in next week's commentary. Note that this week's movement results in a Shamu long signal for a counter-trend trade. However, our trade simulation rule is not to take counter-trend trades, as they are more risky and we like to play it safe. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 are negative. Bullish, brokers, and banks continue in the top 5. Networkers has re-entered the top 5. Bearish, S&P Retail remains in the bottom 5. Oil Services has entered the top 5. Disk Drives has left the top 5 and now leads the bottom 5. Internet and Comp Tech have entered the bottom 5. Gold and Silver has left the bottom 5. For our focus this week, we offer you for consideration a new legal entity known as the One People's Public Trust 1776. It has the potential to change much in the legal and financial worlds of this planet. And this report for the week is humbly submitted by Donald Pearl Jr. from S2PMarketSignal.com. And I am Cynthia Pearl, and I wish you a great week and happy trading. Take care.